someone's going to get hurt if we don't fix this. And the congressional view 3 months ago was, no, don't do anything. Don't move too fast because you might mess up the market. Mm-hmm. And Gensler said, well, a lot of these exchanges are trading security tokens and we don't know what they're backed by. And when they crash, someone's going to lose a lot of money.
Hey guys, welcome back to the channel. Today we have Michael Saylor discussing the current Bitcoin market. This comes at a time when the crypto market is emulating the downturn in the stock market, which is expected. Fear in the market is to be anticipated, especially following the Federal Reserve's last increase and the uncertainties around growing expenses. Despite the Fear and Greed Index indicating instability across the board, Microstrategy CEO Michael Saylor remains bullish on Bitcoin. Yesterday peaked at 30,646 and dipped below 29,000. As of the recording of this video, Bitcoin is currently sitting at 28,868. Saylor is the least surprised by this, but it does show that inflation is still an issue. According to him, central banks would not be able to curb inflation because it is driven by excess money printing. If you enjoy the content we do here, please hit that like button and subscribe to the channel. Let's get right into the interview with Michael Saylor, who will give us his take on the current state of the Bitcoin market.
You spoke with Cathie Wood on stage at the Bitcoin conference. One of the things Cathie said when she was talking with you is she expects $1 million Bitcoin by 2030. How do we get there? For those out there who are really shaking with these prices right now, how do we get to a $1 million Bitcoin by 2030? Do you think that's possible as well?
When she said that, I thought she's so conservative. I can't believe she said just 1 million in front of this audience. But that was just my reaction. It's kind of interesting. Other people have different reactions.
Do you think more than $1 million US by 2030?
I wouldn't put a date on it, but I think it's worth more than $1 million. I think that the next steps are pretty clear. My checklist would be the administration recognizes Bitcoin, check, that happened in March. Mm-hmm. The Treasury, accepts it, check, that happened in April. So we've already got the administration that recognizes a need to support the digital asset economy, and they recognize that Bitcoin is an asset class. I think the SEC approving a spot ETF will be an important milestone. I feel like we're moving toward that with this GBTC process. I would be disappointed if it isn't approved, but I'm certain, reasonably certain, we'll get a spot ETF sometime in the next 36 months. I can't imagine that we won't, and maybe we'll get one within the next 12 months. I would say it's more than 50% likely in the next 12 months. 90% likely, I think, in the next 36 months. I think clear guidance on stable coins is another important thing. When Senator Toomey was speaking to Janet Yellen yesterday, he brought this up and he said, can we get legislation this year? And she said, I would think so. I would think we should.
Saylor goes on to say that big banks are currently unable to issue stable coins because they're unregistered securities, which puts a twist in the industry, but once licensed, will create a giant on-ramp in market capital. It would allow for tens of millions of transactions per day, which would provide massive potential for the crypto and stock markets. Let's listen to Saylor as he discusses the recent news surrounding Bitcoin and the developments with the Secretary of the Treasury pushing for adoption as we speak.
So there's agreement between the administration, and that's a Democrat administration, and a Republican senator. Right. So the Republicans would like this, the Democrats would like this. So I think that kind of guidance is important because there's a massive demand for digital currencies in the form of stablecoin. And yet the uncertainty, the fact that the currencies are currently being delivered in the form of stablecoins, which are unregistered securities, which are unlicensed, which are in a regulatory gray zone, it has the industry twisting in the wind because really big banks can't get it. They can't issue. None of the banks can issue, even though the world wants $1 trillion worth of digital currency. So resolving that will create a big on-ramp for capital into the digital economy. And ultimately that on-ramp in the capital means, imagine if I had $500 billion of USD stablecoin, and then it was sitting with a secure counterparty that I trusted, and now I could move it via Lightning on Terra, right? You really could have 6 billion people with a mobile phone moving millions of transactions a day, maybe tens or hundreds of millions of transactions a day, paying for everything. You see a massive avalanche, a conversion of all the weak currencies to the dollar. You'll see digital dollars become the medium of exchange everywhere in the world, moving on lightning rails, which would be incredibly good for Bitcoin, incredibly good for the entire crypto economy. So I think that the stable coins maturing is a big deal. I think that the FDIC, when they provide guidance to banks that allow banks to either custody Bitcoin or take Bitcoin as collateral against loans. Right now, I think a bank would probably they can't really use Bitcoin as part of their asset package, or have to be reserved for 1-to-1. Whereas, the dollar is reserved for at 5%, or sometimes it's zero. Like a bank could issue $100 billion of loans for zero reserve. And then when they're, at some point, they could take $5 billion of US treasuries and issue $100 billion in debt against it. So I think the FDIC has a very important lever in the way that in the guidance they give for Bitcoin as an asset. And I think that the other big news that happened, it's happening right in front of us, Natalie. I mean, the sound and the fury causes people to miss these things that really matter. Yesterday, when the Secretary of the Treasury said we need to get this done this year and said it in the Senate, that was a big deal. And this morning, FASB met and voted 7-0 in their meeting to create a formal project to review accounting for digital assets, which means Bitcoin. And right now, the accounting is toxic and prejudicial. So there's pretty much no outcome that I could imagine that wouldn't be beneficial or better than the current status quo from a GAAP accounting point of view. So FASB, FDIC, Treasury, White House, SEC, all of these things, they're all gating items for institutional adoption of an asset class. And all of them are in motion right now. And even the negative things, like you can look at the market and all the trading down. I don't think it's necessarily negative. I think you have a lot of liquidity or a lot of leverage shaken out of the system. Everyone that doesn't know the difference between Bitcoin and every other altcoin now has an interesting example of the difference between Bitcoin and Luna, right? They understand the difference, at least figuratively understand the difference. The regulators are now going to have a catalyst to move faster, right? Because now, Gensler said, someone's going to get hurt if we don't fix this. And the congressional view 3 months ago was, no, don't do anything. Don't move too fast because you might mess up the market. And Gensler said, well, a lot of these exchanges are trading security tokens and we don't know what they're backed by. And when they crash, someone's going to lose a lot of money. Now I think the political sentiment will shift to, okay, we understand why you think we should regulate this, right? We understand why the administration thinks this needs to be brought into the public policy framework. I think this will bring the Democrats and the Republicans together. And I think this will bring the Congress together with the administration. I already think we know where their sentiments are. They want safe, transparent, well-backed stable coins. They think Bitcoin is digital property. They think that some of the other security tokens ought to be treated as securities with some disclosure. That's what they think.
Saylor's company made headlines when it decided to invest a significant percentage of its resources in Bitcoin. After meeting its obligations to shareholders, the corporation received 21,454 BTC in its initial $250 million investment. The investment was motivated by Saylor's opinion that Bitcoin is a reliable store of value and an appealing investment asset with greater long-term appreciation potential than cash. Saylor's long-held belief is that Bitcoin is a better investment than fiat currency, and that the corporation had made Bitcoin its primary asset in its treasury reserve position. Comment down below on what you think of Michael Saylor's position. Don't forget to like and subscribe. We'll see you in the next video.